What's up, everybody? Welcome to the Stocks channel. My name is Cory and welcome to your daily stock market technical analysis update. We saw the stock market continue its melt up today. The next question is, how long is this melt up going to last? Before we get into the charts, go ahead and help me out by smashing that like button. And if you're new, subscribe so you can follow along with all of my daily updates. First up, we'll look at the S&P 500. So let's crack open this chart and see what's going on in the stock market today. Alright, so we did see the S&P 500 break to a new all-time high, and we saw a continuation of that move since the breakout. So ever since the S&P 500 broke to a new all-time high, we're now trading above both of our critical resistance trend lines that go all the way back to 1987 and 2009. So when we break out of a trend line and we form new all-time highs, we want to make sure that that breakout is not a false breakout like we saw back here, where we had a breakout of the trend line followed by a huge bearish candle and then a huge correction. So how will we know if this breakout is the real deal or a false breakout? Well, we need to wait and watch the breakout of resistance act as support. So eventually this melt up will have to come to an end, and we're waiting to watch to see if this breakout of resistance is going to act as support and see if we can get a bounce off of one of these resistance levels. Remember, broken resistance turns into newfound support, but we don't know if a level is going to act as support until we see a confirmation of that bounce. So I know a lot of you bears are frustrated by this melt up, but that's exactly what a melt up does. It is extreme optimism, and the price action is going to continue to go up until we finally see the optimism and the euphoria start to fade. So you'll know when a melt up's about to end if you just ask your most bearish friend if they're still bearish. When they finally flip to bullish, you'll know that the melt up is about to end. And if you don't have any bearish friends, just read the YouTube comments and look at all of the bears that we still have in this market. It is incredible to me that we still have people that are bearish on this market when you look at this price action and this trending. Anybody that's a bear right now is just trying to call the top, and there is absolutely no reason to be bearish on this market. When the price action and the trend are this bullish, you go with the trend because, as we always say, the trend is your friend. Trying to fight the trend is likely going to be bad news for your portfolio. So if you're scared of this market or you don't agree with the moves higher, that's fine. But don't be shorting the market. Just go to cash and be patient until you see the opportunity that you're waiting for. So if you saw Sunday's video, this 3611 level was one of the critical levels that we were watching to see if the S&P 500 was going to find resistance at that level. Well, the S&P 500 blasted right through that level today like it wasn't even there. So the next level higher is now all the way up at this 4040 level. So it is possible we're heading to that level because we did get a confirmation break of resistance. So it is possible that this level is a false breakout. So of course we want to give it a few more days and we want to see if this level could act as support and we get a bounce. But even if we come all the way down to the previous trend line and we get a bounce, we could continue to head higher towards that 4000 level. So we're not going to try to rationalize the price action or the trend. We're strictly doing technical analysis and we're following the price action and we're following the trend. We're not trying to rationalize it and we're not trying to explain why what's happening is happening. We're just doing technical analysis and we're trying to remain as unbiased as possible, and that is why we're so bullish on this market. So jumping over to the SPY ETF, you can see that we did get a gap up today, and on the SPY ETF we have a slightly different story, and we are bumping up against this resistance level, which is just under $363. We did open a gap below that won't close until a price level of $359, and we still have the previous all-time high resistance level that could now act as support at $357. So there's a lot of support levels below the SPY ETF where if we do start getting a pullback, the bulls can still find buying opportunities at very high price levels going as low as 357. That's not a huge pullback, maybe a little more than 1% before we start finding possible support levels. Don't forget, during this melt up, the 5 EMA has been so critical for the price action because ever since the melt up started after the election, the price action has repeatedly traded above the 5 EMA. So watch that price action, and price action is always going to be king, but it doesn't hurt that we have such a strong bullish trend going on either. The 5 EMA has still been going up in a straight line, and now the 13 EMA is basically going up in a straight line. The 50 EMA and the 20 simple moving average are just sloping more and more to the positive side, and this bullish trend is only picking up momentum. So remember, the trend is like a force and it's just driving the price higher, and the price action is confirming that that trend is going to remain intact. So if these support levels don't hold up, we always have our Fibonacci retracement levels at 0.236, which is 354, and 0.382, which is 348. We did break out of this consolidation wedge, and it's still possible that that could also act as support. So we have strong support levels going all the way down to 348, and we're likely not going to go any lower than 348 if we even do start getting a pullback going that low. Remember, this is extreme optimism, extreme bullish sentiment, and we have extreme bullish price action and trending. So until something changes or we start to get some bad news, this market is going to want to continue to melt up higher. There's a lot of FOMO and there's a lot of bullish things going on in the news, like a vaccine that's 94% effective. So next up, let's jump over to the Nasdaq 100 QQQ ETF, and we see the Nasdaq 100 finally broke out of consolidation. But it's still too early to call it a breakout because we did get this false breakout before where we broke out of this resistance trend line but failed to hold up above and it failed to act as support. But right now we did break out, and it's just a matter of time before we can get a test of this level as support and see if we get that bounce. To form a daily higher high on the triple Qs, we need to break back above 294. If we can break back above 294, we have price targets above at $300. And if we break 300, our next price target is as high as $312. The Nasdaq 100 has already had a pretty good pullback, and we almost came all the way down to the 0.618 Fibonacci retracement level. So it's very likely that tech is setting itself up to be the next bull leader, and it could lead the S&P 500 even higher because tech has actually been underperforming the rest of the sectors. So if we start seeing tech break out and form new all-time highs and start breaking to our upside price targets, that's only going to drive the S&P 500 even higher. Remember, we still have this bullish price action and bullish trending on the Nasdaq 100, and we continue to close above the 5 EMA, and now we're starting to break out above resistance levels. So all around bullish price action, bullish trending, and bullish breakouts. Next up is the Dow Jones DIA ETF, and we saw the Dow Jones gap up, and we did open another gap that won't close until we go back down to $296. Now that is the previous all-time high, and that level could now act as support, which would also be the support at the gap close. So the Dow Jones is looking really bullish, and we see extreme bullish price action and extreme bullish trending on the Dow as well. So all three indices are looking bullish, with the Nasdaq by far being the weakest. But I do expect to see the Nasdaq start becoming the leader of the next bull market, and we could see industrials and financials and some of these other sectors start to cool off while tech starts taking the lead back over. There is the possibility, if the Dow does start coming down, that we could come all the way back down to the gap at 284, which is also our 0.382 Fibonacci retracement level, and there's also support where we had our broken resistance trend line that could now act as support. Next up is the VIX, which is our fear indicator, and the VIX continues to head lower as the market heads higher, which is exactly what we would expect to see. The VIX did break below our support level at 24.8, and it continues to head lower. At this point, it looks like the VIX is likely going back to 18, where we had that gap up from the March crash. As the VIX heads lower, we would expect to see the market continue to grind higher and this melt up to continue. Next up is Amazon stock, and we see Amazon still consolidating near its lower support trend line, but we did get that confirmation bounce. The price action is trading right around that 5 EMA, and if Amazon could start closing back above all of its moving averages, it's likely heading back up to the resistance trend line somewhere around $3,400. If Amazon starts breaking down below the support trend line at $3,000, that will be bearish, and it's likely we're going to see lower price targets on Amazon. Next up is Apple, and we see Apple still looking bullish, closing above the 5 EMA for yet another day, and the bullish trend picking up momentum. It looks like that 20 simple moving average is finally starting to slope to the upside, and that 50 EMA is looking really good as well. So the price action and the trend on Apple are looking really good for the bulls, and Apple is a market moving stock. So if Apple's going back into a bull market, it's likely going to carry the rest of the stock market with it. Next up is Tesla, and we see Tesla in a really nice consolidation pattern. And when we see a stock consolidating like this, bouncing between a resistance trend line and a support trend line, it's like a spring building up energy, waiting to pop, and it's ready to go in one direction or the other. So on Tesla, we want to wait to see if it breaks down for the bears or breaks up for the bulls. But either way it breaks, we want to be bullish or bearish because this will be the direction that Tesla is going to go. It does look like Tesla was added to the S&P 500 after hours, so it's likely that we're going to see the bull scenario play out, and we're going to start seeing Tesla heading back up to its $500 price target, which was its previous all-time high. Next up is Boeing stock, and Boeing is looking really bullish, still closing well above its 5 EMA, and we see this bullish trend really starting to turn up and grow some serious bullish momentum. Once that 20 simple moving average crosses back above the 50 EMA, it's going to be game on for the bulls, and this is absolutely going to be a dip buying opportunity for Boeing stock. Boeing just came out of a huge bear market where the price has been suppressed ever since the March crash, and this could be a very explosive bull market coming out of this bear market. So watch the trend building up momentum and watch the price action, and it could be a dip buying opportunity for Boeing. Any event that it does start pulling back, it could be a great opportunity to go long on Boeing. Next up is NVIDIA stock, and we saw NVIDIA bounce off of our support trend line, and now it's continuing to look bullish because we're getting price action closes back above all the moving averages. So I'm looking for NVIDIA to come back up and test the resistance at 570, and if NVIDIA can break above 570, come back and test that as support and bounce, it's likely NVIDIA is going on another bull market run, and it's going to continue to head to new all-time highs. Next up is the dollar, and we still see bearish price action and bearish trending, and we're going to wait and watch to see if the dollar is going to break support at $92 or head lower. Remember, a weak dollar is bullish for the stock market. Next up is gold, and we see gold did bounce off that 1860 level, and it's starting to find resistance around the moving averages. So we need to see if gold can break back above the moving averages and then ultimately test that 1930 resistance level again. And if it can break 1930 and test it as support and bounce, we'll know that gold's going into that bull market. On silver, we're still holding up above our support trend line, and it's likely that silver is going to find resistance at 25. So the similar thing with gold, we're waiting for a break of resistance, a test as support, and then that confirmation bounce for the bull market to begin. On Bitcoin, we see the bulls still fully in control, still holding up above that 5 EMA, and we're seeing some nice volume today as we approach our $17,000 price target. Now, I do expect Bitcoin to get up to 17,000 and find some resistance finally, and maybe even get a nice pullback and a buying opportunity, some consolidation before heading back higher. This has been a huge bull market run for Bitcoin, and it's likely that we're going to see some resistance and some consolidation once we get to our price target. On the financial sector, we're still seeing extreme bullish price action and extreme bullish trending. On the industrial sector, we still have that extreme bullish price action and that really strong bullish trend. On the healthcare sector, we're still trading above the 5 EMA, and that bullish trend is still very strong in the upward direction. So all the sectors are looking great, and the only sector still looking somewhat lagging right now is the tech sector. So as soon as the tech bulls come back and start driving the tech sector higher, we're likely to see the S&P 500 continue to melt up to new all-time highs. So going back to the S&P 500, it's no surprise the S&P 500 continues to go higher and break to new all-time highs. All of the sectors across the board are bullish, and we see extreme bullish price action and trending going on across the board. As long as the market remains this bullish, we're not expecting to see any significant pullback in this market. So any dips in the stock market are being bought up like crazy because there's a lot of bulls out there looking to get into this market. So if that makes you uncomfortable, it's never a bad idea to just stay in cash and sit on the sidelines until things clear up for you and you can make a decision on what you want to do. But right now, I don't suggest FOMOing into the market. We're likely going to hit resistance very soon, but this melt up is also likely to continue. So the market can stay irrational, so don't try to rationalize it and don't try to predict what it's going to do. Just follow the price action and follow the trending, and you're going to be on the right side of the trade more often than not. Don't forget, we got the Stocks Channel Discord if you're looking for a trading community. We are making trades with entries and exits, so if that interests you, you can always find a link in the description below on how you can become a member. So please help me out by smashing that like button. I really hope these videos are helping you out, and go ahead and smash that subscribe button if you're new so you can follow along with all of my daily updates. Thanks for watching, everybody, and as always, I will see you in the next episode.